What if I told you that the single wealthiest family in modern history didn't make their fortune from oil, technology, or real estate, but from something far more invisible and far more powerful, controlling the debt of nations themselves? The Rothschilds, a name whispered in banking halls and erased from Forbes lists. A family that built an empire not with armies, but with ledgers. And their weapon of choice wasn't violence, it was information. Here's what they don't teach you in school. In 1790, while America was barely learning to walk as a nation, one family in Frankfurt was already building the infrastructure that would become Wall Street. Not through innovation, through monopoly, through a financial mechanism so elegant, so ruthless, that it turned kings into clients and treasuries into profit engines. And here's the part that should terrify you. That same system, refined and digitized, is why your tax dollars disappear into interest payments. It's why national debt never shrinks. It's why every financial crisis somehow makes the same institutions richer. Before we go further, drop a comment. Where are you watching from? Because this story connects London to New York to your local bank branch, and I want to know how global this audience really is. And if you're here for the unfiltered truth, not the textbook version, hit subscribe. Because what comes next isn't speculation. It's documented. It's just never connected. Let's follow the money. The official story goes like this. Mayer Amschel Rothschild, born in 1744 in the Jewish ghetto of Frankfurt, was a coin dealer who got lucky. He befriended a prince, financed some armies, and his 5 sons spread across Europe to build banks. A rags to riches tale. The American dream, but European. Except that's not what happened. What actually happened was the construction of the first transnational financial intelligence network in human history. Mayer didn't just send his sons to London, Paris, Vienna, Naples, and Frankfurt. He embedded them in the 5 most powerful financial capitals of the 1800s, each with a singular mission: control sovereign debt. Not businesses, not land, governments. Here's how it worked. In 1815, Europe was broke. The Napoleonic Wars had drained every treasury on the continent. Nations needed to borrow desperately. But who had the capital? And more importantly, who had the intelligence network to know which governments were creditworthy and which were about to collapse? The Rothschilds did. Nathan Rothschild in London didn't just finance the British war effort. He created a private courier system, faster than any government's. Carrier pigeons, coded messages, agents in every port. When the Battle of Waterloo ended, Nathan knew the outcome a full day before the British government did. And here's where it gets dark. He walked into the London Stock Exchange and started selling British bonds. Panic spread. Traders assumed Britain had lost. Prices collapsed. And then, at the bottom, Nathan bought everything back at a fraction of the cost. One day, one move, millions in profit, and control of a significant portion of British government debt. Sound familiar? Fast forward to 2008. Lehman Brothers collapses on a Sunday night. By Monday morning, a handful of investment banks, with access to Federal Reserve liquidity windows and high-frequency trading algorithms, are buying distressed assets at pennies on the dollar. The game changed. The players didn't. But here's the deeper parallel. The Rothschilds didn't just trade bonds. They became the market makers. After Waterloo, European governments didn't issue debt through competitive bids. They went to the Rothschilds. Why? Because the Rothschilds controlled the secondary market. They decided what your bonds were worth after you issued them. Think about that. If you're a finance minister in 1825 trying to raise money, and you know the Rothschild Bank controls whether your bonds trade at par or at a discount in London, Paris, and Vienna, are you really negotiating? Or are you taking their terms? This is the birth of the sovereign debt trap. Sound familiar? Today, JP Morgan Chase, Goldman Sachs, and a handful of primary dealers are the only institutions allowed to buy bonds directly from the U.S. Treasury at auction. They set the prices. They control the secondary market. The Treasury issues. The dealers decide what it's worth. The mechanism hasn't changed. It's just faster and dressed in digital clothing. But the Rothschilds went further. They didn't just finance governments. They financed both sides. During the American Civil War, the London and Paris branches issued bonds for the Confederacy while the Frankfurt branch maintained TIs to Union financing networks. No ideology, just liquidity. Sound familiar? In 2022, while Western banks publicly exited Russia after the Ukraine invasion, commodity trading desks and offshore subsidiaries quietly continued financing Russian oil flows through complex derivatives chains. The flags change. The arbitrage doesn't. By 1850, the Rothschild family had become synonymous with central banking itself. They financed the Suez Canal. They bailed out the Bank of England. They held bonds in railroads, mining companies, and national treasuries from Brazil to China. But here's what made them different from every wealthy family before or since. They didn't need to own the asset. They owned the debt on the asset. And debt, unlike equity, always gets paid first. The Rothschilds understood something most people still don't. Wealth isn't about what you own. It's about what others owe you. And if you're the only institution with the intelligence, speed, and capital to dominate sovereign bond markets across borders, you don't control economies. You are the economy. This is the foundation of modern Wall Street, not innovation. Monopoly on liquidity. So here is the question nobody asks. How did a family operating out of a ghetto in Frankfurt become more powerful than kings? The answer is a single, revolutionary financial technology that predates computers, predates telegraphs, and still runs the world today: the interlocking bond syndicate. Here's how it worked. When a government wanted to issue debt, let's say France in 1830, they didn't just go to one Rothschild bank. They went to the entire network. James in Paris would lead the issuance. Nathan in London would guarantee a market. Salomon in Vienna would distribute to Austrian investors. Karl in Naples would manage Italian liquidity. Amschel in Frankfurt would coordinate intelligence. One bond, 5 markets. Instant diversification, zero competition. No other banking family could compete because no other family had the geographic reach, the speed of information, or the trust across borders. The Rothschilds created the first too big to fail institution. Except it wasn't a bank, it was a dynasty. And here's the part that changes everything. They didn't invent this system for profit alone. They invented it for immunity. Think about it. If you hold the debt of every major government in Europe, you're not just rich. You're untouchable. You can't be taxed into oblivion because the treasury needs you. You can't be exiled because the king owes you money. You can't be scapegoated because if you collapse, the entire bond market collapses. This is the origin of moral hazard, not in 2008, in 1815. And the person who perfected this system, the architect who turned sovereign debt into a perpetual profit machine. You won't believe the name, but the receipt is wilder than you think. Let's break down exactly how the Rothschild bond arbitrage network functioned, because this is the blueprint for every financial empire since. Step 1. Intelligence asymmetry. The Rothschilds built the fastest private communication network in Europe. We're talking pre-telegraph. Carrier pigeons trained to fly between London, Paris, and Frankfurt. Coded riders, encrypted messages. By the 1820s, the Rothschild banks knew the outcome of political events, harvests, wars, and trade negotiations before any government did. Why does that matter? Because bond prices are based on perceived risk. If you know a war is ending before the market does, you buy bonds at panic prices. If you know a revolution is starting, you sell at peak. Information wasn't power. Information was money. In 1830, when revolutions broke out across Europe, the Rothschilds had advance intelligence through their network of agents embedded in royal courts and parliamentary halls. While other investors panicked, they restructured debt, bought distressed assets, and emerged holding even more sovereign paper. Fast forward, high-frequency trading firms today spend millions laying fiber optic cables between stock exchanges to gain microseconds of speed. The principle is identical. Faster information equals arbitrage profit. The technology changed. The game didn't. Step 2. The syndicate model. Here's where it gets technical, but stay with me, because this is the core. When a government issues a bond, someone has to buy it. But in the 1800s, there was no global market, no bond exchanges. So how do you sell £1 million of Austrian debt to investors in London, Paris, and Amsterdam simultaneously? The Rothschilds created the underwriting syndicate. Here's the mechanism. Austria wants to raise 5 million florins. They go to Salomon Rothschild in Vienna. Salomon agrees to buy the entire bond issuance upfront at a discount, let's say 95 cents on the dollar. Austria gets their money immediately, no risk. But now Salomon owns 5 million in bonds. What does he do? He doesn't hold them. He distributes them through the family network. Nathan sells to British investors. James sells to French investors. Carl sells to Italian investors. Each brother takes a small spread. Let's say they resell at 98 cents. 3% profit. No risk. And they control the entire issuance. But here's the genius. Because the Rothschilds controlled distribution in multiple markets, they also controlled the secondary market. If you bought an Austrian bond from Nathan in London and wanted to sell it, who's the buyer? Another Rothschild agent. They set the bid and ask. They controlled liquidity. This is what Wall Street calls market making, and it's still how government debt works today. In the U.S., there are only 24 primary dealers authorized to buy treasury bonds directly at auction. J.P. Morgan, Goldman, Citi, a handful of others. They buy at auction, then resell to pension funds, foreign governments, and retail investors at a markup. The treasury gets funded, the dealers get a spread, and because they control secondary market liquidity, they control pricing. The Rothschilds invented this. In 1825, Step 3. Cross-border collateral chains. This is where it gets truly diabolical. Say Britain issues a bond. Nathan buys it, but instead of just reselling it, he uses it as collateral to borrow from the Bank of France. Now, he has cash and still controls the bond exposure. He uses that borrowed cash to buy Prussian bonds. Those Prussian bonds become collateral for a loan from a Dutch bank. And so on. One bond, multiplied across borders. Layered debt on debt on debt. This is the prototype for modern rehypothecation and the shadow banking system. In 2007, Lehman Brothers had pledged the same collateral to multiple counterparties across London, New York, and Tokyo. When they collapsed, no one knew who actually owned what. The collateral chains were so complex, so interlocking, that unwinding them took years. The Rothschilds built that in the 1800s. Without computers. Step 4. The sovereign debt trap. Here's the end game. Once a government becomes dependent on bond markets to finance operations, they can never escape. Why? Because debt rolls over. A bond issued in 1830 comes due in 1840, but the government doesn't have the cash to repay it. So what do? They issue a new bond to pay off the old bond. And who underwrites the new bond? The Rothschilds. This is the debt spiral, and it's not a bug, it's the feature. By 1850, the Rothschilds held bonds in nearly every European government, plus Mexico, Brazil, and the Ottoman Empire. They weren't just bankers, they were the creditors of nations. And creditors have leverage. When France needed financing for colonial expansion in the 1860s, the Rothschilds attached conditions, trade concessions, tax guarantees, control over customs revenues. This is the origin of financial imperialism. You don't invade, you lend. And when they can't pay, you take the collateral, which is the nation's infrastructure, resources, and revenues. Sound familiar? The International Monetary Fund has issued over $1 trillion in loans since 1945. And almost every loan comes with structural adjustment programs, privatize state industries, cut public spending, open markets to foreign capital. The borrower loses sovereignty, the lender gains control. The Rothschilds pioneered this. Step 5. A generational wealth transfer. Here's the part that seals it. The Rothschild fortune didn't vanish, it evolved. By the early 1900s, the family had begun transitioning out of visible public banking. Why? Because the game had changed. Governments were nationalizing industries. Socialist movements were targeting wealth. Publicity became a liability. So they did what every smart dynasty does. They went private. family trusts, holding companies, investments in other banks, mining operations, railroads, and eventually oil and pharmaceuticals. The name faded, the wealth didn't. Today, estimates of the Rothschild family's net worth range from $400 billion to over $2 trillion. But here's the thing, no one knows. Because it's held in private trusts, offshore accounts, and interlocking corporate structures that make transparency impossible. This is the ultimate evolution of the bond syndicate model. Wealth so diffuse, so layered, that it becomes invisible. And here's the statistic that should keep you up at night. As of 2023, global sovereign debt hit $307 trillion. That's over 300% of global GDP. And the interest payments on that debt? Over $2 trillion annually. Who do you think holds those bonds? Pension funds? Yes. Central banks? Yes. But also private banks, hedge funds, and family offices that trace their lineage directly back to the systems built in the 1800s. The players changed. The playbook didn't. So here's where we are. The Rothschild family didn't just build wealth. They built a system where governments are perpetual borrowers, where private banks control liquidity, and where debt is the most powerful tool of control ever invented. And that system is now global, instantaneous, and running on algorithms. In 1815, it took Nathan Rothschild a day to learn the outcome of Waterloo. Today, AI-driven trading platforms execute billions in bond trades in milliseconds based on Federal Reserve statement keywords. The speed increased. The monopoly didn't. The lesson here isn't that one family controls the world. It's that the architecture they built, the interlocking sovereign debt networks, the bond syndicates, the collateral chains, became the foundation of modern finance. And once that foundation was laid, it became self-replicating. Every financial crisis strengthens it. Every bailout reinforces it. Because here's the final, uncomfortable truth. The system isn't broken. It's working exactly as designed. Debt isn't meant to be repaid. It's meant to compound. And the institutions that control debt markets aren't service providers. They're the landlords of global capital. This is the Rothschild Code. Not a conspiracy, a patent. A financial technology so effective it's been copied by every power structure since. From the Federal Reserve to the European Central Bank to the International Monetary Fund. They all run on the same principle. Whoever controls the bond market controls the government. And whoever controls the government controls everything else. We're living in the world the Rothschilds built. We just call it by different names: central banking, quantitative easing, primary dealers, sovereign debt markets. The terminology modernized. The mechanism is 1815 vintage. So the question isn't whether we're trapped in the system. We are. The question is, are we wiser now? Or are we just walking the same path in better suits, with faster computers and bigger numbers? History doesn't repeat, but it rhymes. And the rhythm of sovereign debt has been playing for over 200 years. If this connected dots you've never seen aligned before, share this video. Comment with the biggest shock for you. Was it Waterloo? The bond syndicates? The collateral chains? And subscribe, because we're just getting started. The next episode traces how this exact system migrated to Wall Street and built the Federal Reserve. The ledger is open. The receipts are public. We just have to read them. Are we wiser now, or walking the same path in better suits?